Hi everyone, this is just a short video to run through the Winter Economy Plan, which was announced by Rishi Sunak on the 24th of September 2020. Firstly, for those of you that don't know me, my name is Chris Thomas and I'm a Director of One Accounting up in Edinburgh, and we support small and medium-sized businesses across Scotland and the rest of the UK. So the main impact for businesses, and there's quite a few, we'll run through the Job Support Scheme, which is a new scheme which is being introduced on the 1st of November. There's a welcome extension of the 5% VAT rate for hospitality, and then there's more time to pay some VAT and income tax, extension of the self-employed SEISS scheme, and an extension of loan repayments dates if you've taken out a CBILS loan or a Bounceback loan. So let's just run through those in a bit more detail. So firstly, the new scheme is the Job Support Scheme, and this is a 6-month scheme starting for the 1st of November. And it's important to say, although the furlough scheme comes to an end on the 31st of October, you as an employer don't need to have used the furlough scheme to be eligible for this new Job Support Scheme. So the terms are actually very different from furlough. There is still some government money out there to support you, but as you'll see, it's quite a lot less. So firstly, to be eligible, employees must work a minimum of 1/3 of their hours, and you need to pay them in full for those hours. And then for the remaining time, the government is going to pay 1/3 of the remaining percentage, if you like. You as the employer also need to pay 1/3, and then the worker has to forego 1/3 of their salary or wages as well. So how that works out is that if you have an employee just working 1/3 of their hours, you need to top that up by another 22% so that they earn 55%. You as the employer are covering 55% of their salary or wages. The government is going to give you 22%, and the worker themselves forgoes the remaining 22%. So overall, the worker is getting sort of 77, 78% as well. Employers still need to pay employers' national insurance and also employers' pension contributions as well. So my first thoughts on this are for a lot of businesses, this isn't going to make economic sense. A couple of reasons why you might want to enter into the scheme. Firstly, it's almost if you want to be seen as a good Samaritan. Certain businesses, I think, might struggle over the winter, but if you want to help employees that have been with you for the long term and have maybe got a bit of cash built up to invest into this, it's going to cost you 22% of the worker's wages. So it's a big decision for you as the business owner, but I think if you see coming into spring next year, possibly some better economic outlook for your business, then to preserve the jobs and keep them open, you might want to contribute this extra 22% and help the worker. The other one, which I've heard, is if you have employees that potentially have been with you for a long time, and unfortunately, if you were to make them redundant, then there'd be quite a large redundancy payment due to them because of the number of years service. Then in a way, this could be a way to defer that redundancy payment, if you like, or do all you can to try and keep their job open and therefore avoid the redundancy payment. The next one is an extension to the 5% VAT rate for the hospitality and tourism sector. So initially when this 5% scheme was announced, so the VAT rate for these sectors was cut from 20% to 5%. It had an end date over the middle of January, the 12th of January, which just made no sense really. As you probably know, accountants and most sort of tax advisors like to have a nice calendar month end or a quarter end for these schemes. So the good news is it's been extended to the 31st of March 2021. And another welcome bit of news is that for those businesses that have deferred the payment of VAT when lockdown started, businesses have the opportunity to defer VAT that was due for payment between the 20th of March and the 30th of June this year. The original scheme was that you could extend that payment to the 31st of March next year, 2021. And now you can actually extend the payment terms further. So you can actually pay off the VAT that's due in over 11 payments. So put simply, if you had a £33,000 VAT deferment, what you can do is pay £3,000 a month, really starting from the 31st of March 2021 into the following year, into the early part of 2022. So that gives you a cash flow buffer, cash flow advantage doing that. Another extension of payment terms was announced for self-assessment payments for income tax. So if you recall, when lockdown started, there was all taxpayers could defer payment of the payments that were due on the 31st of July 2020 for 6 months, so that they then could pay these amounts on the 31st of January 2021. And the good news is there's going to be a further 12-month extension to this for those taxpayers that want it. This is up to a maximum of £30,000 of income tax. So if your tax liability is more than £30,000, unfortunately, you can't use the scheme. But as you can see there, you can extend this into you can extend this by up to 12 months, meaning that you've got until January 2022 to make these tax payments as well. So my thoughts on this, there's still going to be interest charged on the tax. I think if you can afford to pay it, then it's probably better to bite the bullet and pay it in January 2021. But I think it is a good scheme for those individuals that have quite a big cash flow problem. I think it's going to help you there. A couple of more things. So for the self-employed, there is an extension of the Self-Employment Income Support Scheme, or the SEISS. So this is very much means tested. So it's not available to all of the self-employed. It's really for those that have been seen their businesses severely impacted by COVID-19. So there's two amounts available. So there's firstly looking at 3 months of profits from the 1st of November this year. It's actually a maximum of 20% of average monthly profits, up to a total of 1,875. But there will be a second of grant available, as you can see there, from between February and April next year. Still subject to review, and as I say, it will be means tested and really only available for those businesses that can prove that they need it. Okay, so that just ends this short video, and that's a summary of the extra government support that's available. If you have any questions for me, then please do get in touch. It's One Accounting. We're in Edinburgh on 0131 220 0152, or you can contact us by email at info@oneaccounting.co.uk. Thanks for watching.